Good morning, guys. I thought this morning I'd do a quick video analysis for you. My manipulation points have been marked, but there's not really much going on. We've got a lot of ranges going on, although the Aussie has been 3 days sideways. It did make a push down yesterday, but that looks like it may potentially reverse, because if you put the fib level on high to low, we're just about to pass the 71% retracement mark. Now if we break that and then break this high, potentially we can look for some longs, but there's a lot of liquidity above here, so potentially there'll be a reaction. We could see, so you'd have to look for the breakout, basically look for a reverse stop run, and then see if we could get maybe something like that. Okay, you'll also notice that we've got this sort of V shape, okay, or W shape, or head and shoulder shape. So it looks like this may have been a daily stop run yesterday on the liquidity that was laying below the previous sort of 2 days. Worth keeping an eye on, maybe put an alarm up here, because the 3-day market cycle ended here and then it's just gone into chop. So but like I posted in the analysis room this morning, we got a lot of news today. So pretty similar situation with the Kiwi, although it's not, well, I suppose you could say it's like a reversal pattern. I'd be looking for an hour closure, or maybe, you know, spike up, pull back, and then spike back up again, and a close on the 30-minute before looking for longs, because if we are reversing, there is a long way up. We've got support here, and support here, so it may just stay a little bit choppy. But GBP USD is pretty much, for me, been doing nothing. This looks like, you know, a daily retracement, but when you put on the high low, apart from this move down, well, yeah, I suppose if you look at it that way, this would be the first push down. So let's have a look here. Put our fib retracement on, and we're hitting the 71% mark. So there could be something around about here. These levels are not super clear to me, so you'd have to look for a very clear sort of 30-minute rejection of this area here. If I wanted to put my level on, I'd probably put my level there, maybe another one here. So I'd look for a push down, break a structure, maybe just to break this low on the 1 hour, back down, and then look for a reversal pattern, and then maybe look to profit down here somewhere. But you can see this area has been rejected multiple times, and we're still hovering around the 1.270 mark, which has been a bit of a menace for the last couple of weeks, actually. GBP JPY, again, sideways price action, so our range would be here. Okay, so there's a lot of accumulation here, and for me, if we're going to break down and go bearish, we'd maybe break this level, come back up. You may see that it will go bullish again after this, but I'd be looking for a clean breakdown underneath 187.06 before a pull back into this area, and then a confirmation to go short. Gold is being a bit crazy, long time accumulation. I trade this on a breakout strategy, and I use the 30-minute time frame. So what I would prefer to happen is either a closure on a 30-minute or 1 hour, which is coming up in about 15 minutes. A 1 hour close would probably do it. So a close above 2030, and if you follow the plan what I have when it comes to breakouts, I want this candle to come down, just respect the wick, or maybe just take the wick out, and then filter down to the 30-minute, and I want to see, so if price was to close where it is here, all right, I want to see that candle come down, and then it can either stay there, or it could close like it is there, and then another candle just to come up and close again. So we'd have a bearish candle down, let's do that in red, and then we'd have a bullish candle, a bullish candle closing upwards, right? And then so we've got like a situation where breakout buyers are getting trapped. Okay, so the breakouts, the early breakouts will get trapped, and then it will come down and just liquidate these early buyers, right? So it may even come down and just take this wick, or take this low here. There's no wick on the bottom of this 30-minute candle, so there's a high chance that there will be a wick created on this candle this morning, and then once you've got, maybe we'd see something like that, okay? But once we've got that breakout, and then we have to have a pullback just to, you know, take a bit more liquidity from the market. So anyone breaking out now, you can see these wicks are forming new highs, new high, new high, new high. For that to close, and then for the candle just to come and slam down and then come back, and then the next candle would open, and then maybe it would just push up a little bit like that, and then come back down and just close above this area here. And for the wicks, you'd be looking at maybe something, the wicks would look something like that. So that would be the first one, and then the second one, we want the wicks to start respecting each other. So as it closes, as it opens, it would just pull back a little bit, create a wick, and then close above. So it takes a bit of time. Patience is key. And then what I would then do is I would have a limit order on price action passing the wicks, because once it starts creating new highs, there's a very high success that it will, you know, it will keep going. And then we just put our stop losses under the wicks wherever they may be, and I'd be looking at profit somewhere around about here, at least the first take profit, maybe take a bit off, and then if we did get, you know, a big powerful push through, you can maybe hold it a little bit longer, but definitely take some off, if not all of your profit at this level here. So